Hi there, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the strategy today on this 18th of November. Before we do that, though, be aware that this webinar is intended for a global audience. It may not be suitable for everyone. Therefore, please take a look at admiralmarketsglobal.com. Choose your country of residence and contact an appropriate entity. Also, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, and you're also aware of the risk involved when trading. Alrighty, so today, let's take a look at the calendar. We got, as you probably know, a big FOMC statement in about, I think, 2 p.m. typically, right? Let me check, 2 p.m. Eastern time. Yep, indeed. Let me try to, I'm looking for the calendar. Oh, here it is. Good. 2 p.m. should be, there it is. This is GMT time, 7 p.m. What else do we have? I don't think that much heavy news on Wednesday, at least in the European session. As you can see, some yellow and green stuff, news events, but nothing major. Some speeches from the Fed, building permits in the early morning, though, Eastern time. That could be maybe interesting. All right. So let me see, first of all, if you can hear me properly. Is the sound okay? Everything fine from audio and visual? In the meantime, let me show you this heat map. Some big movers, and in the up and downside here, as you can see, some stocks regarding the currencies. Euro odd, biggest downside trade. Odd Swissy, the biggest upside trade. Pound New Zealand, as always, taking the volatility golden medal here, as you can see. Dollar yen, the least volatility. So you can see that the typical pound crosses again, doing very good in ups and downs. And the odd, basically, probably the biggest gainer, the biggest, I mean, the currency with the biggest gain, actually. We can take a look at the currency ranges as well, by the way. Pound, as you can see, typically first, Aussie second. It did make a lot of movement against the euro, as you can see, the odd Swissy, so it's second. And we got the dollar not moving much, maybe because of FOMC, for instance. CAD not moving much, etc. All right. Still want to check if you can hear me, and then we can move on. If, in case you can hear me, I'm going to tell you about some price action strategy I think we'll take a look at. Or if you have any other suggestions, please let me know. It's okay. Other things you can find on Admiral Markets website: technical analysis, market sentiment, fundamental analysis. Yesterday there was one on dollar CAD, important yen pairs. You can see chart of the day. So there were 3 articles yesterday with some tips and tricks and some ideas, perhaps, right? So that's something worth it. Let's see. What else can I show you? Here you can see also more information about MetaTrader 4 Supreme Edition. You can try a free 30-day demo, in fact, see how it feels and acts, and you can see the advantages live in front of your eyes. All right, so take a look at that. You can find it on the website. Just go to trading platforms, click on MT4 Supreme Edition. Alrighty. I still didn't hear from anyone about the sound, so yeah, I'm going to be annoying and ask you again. Otherwise, I really don't know if anyone is hearing me. There are not many in here, so I guess if you are listening, then it's time to act and tell me if you can hear me. So I'll just wait for that first of all. Ah, finally. All right, that took a long time. Thank you. Uh, we got look at the euro dollar yesterday, and well, it hit the 106.75 area that I was hoping for. Let's take a look at the 1 hour chart. I think I was looking for 4 hour chart. Remember this 4 hour candle to be bearish or a retracement to 106.75. That was not bearish. It was bullish. So 106.75 was still the target, the entry level I was looking for. Um, and because otherwise, if this would have been bearish, right, this candle, then price would probably not have gone back to 106.75. That's what I was saying. So if this was be bearish, I was looking for retracement to 106, halfway that candle, to about 106.55, 5-ish. It ended up bullish, so still thought that 106.75 retracement was possible, 106.80-ish, and price basically, if you look at price action, right, just every time you hear a bearish candle, pushing lower and lower. So from that point of view, it's just trying to scale in or try to enter a trade as these bearish candles are developing, as these bearish candles are pushing lower and lower, trying to catch part of this momentum to the downside, really. And when the momentum is occurring, then typically we shouldn't count on a very big retracement. Because if it retraces big, the swing high, swing low is over. And that's basically the difference between trading a swing, right, and trading in the swing. If we're waiting for a retracement of the swing, we could put a fib, for instance, from here to here, or from here to here, and we would be waiting for a retracement all the way here. But those big retracements don't happen all the time. Sometimes price keeps pushing, right? Like this, although it's not a big push, still it does keep pushing. Or here, for instance. If we start putting a fib from here to here, right, we don't get the retracement. We don't get the retracement. We don't get, well, we get a bit, but not deep enough probably. Even here, not that deep. So fibs are great, but if we wait for a full retracement on a particular swing, high, swing low, whereas the impulse is still continuing, we could be waiting long. So that's why sometimes it's good to trade within the impulse. So instead of waiting for such a big retracement to happen, we could wait for a smaller retracement, like this, for instance, here. Small pullback within this downside. If we see indeed enough evidence, enough good candles that are showing that impulse. So what are good impulse candles? Price action is defined by, now let me formulate it differently. I mean, good momentum candles where you see good price action building, typically the candles are bigger in that direction. The majority of the candles will be in that direction. The candles to the opposite direction will be smaller, often staying within one candle of the momentum. And the close of the momentum candles will be near the low, indicating control. So let's take a look at that. Those are the price action rules, or impulse rules maybe, but that's also price action. So here, for instance, you see when you look at this downside, what are the bigger candles? Clearly bearish candles, right? Definitely. They're bigger. They're in the majority. The upside candles are small, often stay within the range of the previous candle or two. And the closes of the bearish candle are near the low. In many cases, at least. Doesn't have to be always, but so this downside obviously showing good momentum. And this, in fact, showing like could be seen as maybe one swing high, swing low, or in any case, you can see that it's a continuous push with some smaller pauses. If we look at a 1 hour chart, we would see this as a pause and this as a pause. But not on a 4 hour chart. This is one push on a 4 hour chart, I would say. At least looking at the oscillator, you can see that this is all one piece. So point is that if we see an impulse like that, we can be a bit less demanding in the pullback that price makes. Be a bit more confident in taking a shallower pullback as an entry and putting a tighter stop loss because price should probably not make that bigger pullback. Yesterday's example is one of those, right here at 106.75. And was just retracing actually this candle. So from a daily point of view, you see bearish candle, all that price action, of course, leading up to yet another bearish day within this bearish momentum, right? Because this is still pushing. All the way from this turning spot, this has been pushing and pushing with the same characteristics that I just described. Big candles to the downside, small candles to the upside. Majority of the candles are to the downside. The closes are near the low. And any bullish candle is mostly within the previous candle. Right? Look at this bullish candle, stays within, stays within, stays with these two stay within, this stays within, this stays within. Even these three bullish candles all stay within this bearish candle. So on the daily chart, we're definitely in an impulse. 4 hour chart, we are in a new impulse because this particular zone here was a correction on the 4 hour chart, just like this as well. These green circles were sizable corrections for the 4 hour chart. So we're in a new impulse on the 4 hour chart, but we're still in the old or current one on the daily. So now we have a 4 hour bullish candle, as you can see, but it's small. It is a bit engulfing. Well, it is engulfing the previous one, in fact. So it could be a bit of a warning sign, but we have to be careful of those because this was also actually bullish and perhaps could meet the requirement of a pin bar, perhaps. The wick here is pretty big, so you can see that some of these price action reversal signals can be too early. Yesterday's would have been a loss, and in the case if you saw that as an upside trade, I still saw it as a downside trade because of the downtrend, down momentum that's occurring. So that just shows you there's two ways of looking at price action. Similar, exact same spot. There were potentially two different trades in two different directions visible, really. The upside won, lost, sorry. Downside has not won as yet because the target has not been reached, which I think is 105.20. But as I said yesterday, but in the meantime, it's a good question if the trade should not be moved to break even, or at least maybe trail stop the stop loss to 106.83-ish, I think. And the risk would be, well, only a few pips. Negligible, or how do you say it? I cannot say this word. It will be very small, so it's not worth not doing it. I think it's worth moving that trail stop because if this is an impulse, it should not retrace above, I would say, these highs. What is the characteristic of impulse that we don't really break through many of these dominant candles? So sometimes it happens. Look at this wick here, pushing through this candle, right? So sometimes yes, but is this really a dominant candle? I don't know. There is some wick here, so I'm not sure if I would consider that a dominant candle as yet. Yes, it broke that high, and then went and continued, as you can see. So, the question is if that can be considered a dominant candle, I would still consider maybe this one to be it, or even this one. But okay, this one, as you can see, was more of a double top here with this candle. So a close near the low is important to know if that candle is important about has that significance in the market. A close maybe somewhere, preferably, well, let's take a look at this candle. The low is 52, close is 56, that's 4 pips. The high is 88, so we're looking at a total of 37, 5 out of 37. 5 divided 37, 13% wick. That's something like that. That's great. Anything below 20 probably, right? 20 to 30 is okayish. Above 30, it's getting definitely more than 50 is not good, right? But 30 to 50 is already a gray zone. What is this? Quickly, let me calculate. All right. It's not that bad actually. It's 26. Seems more than I it's less than I expected. I thought it would be more, but yeah. So yeah, definitely below 20 is good. 20, 30, okayish. 30 to 50, definitely some doubt about the strength of that candle. Like this one probably is 50. Now, if you're in a correction, that's the place where you can get into a bit of a trouble sometimes, because obviously this is a strong candle, but ultimately it was still in a bigger correction. So that could be a bit something that can cause some danger or losses. We do see some bullish candles here. We see some bullish candles here. And then the question always is, when is the correction over? From a time factor point of view, just throwing in a total different element, you can see that this is candle number 9. So from my point of view, the chance of a bigger correction was definitely very high for those that know my time factor rule. So that's how I would judge that particular candle, because of a different element, not only because of price action in a way, right? So let's see, this is a bullish 4-hour candle. It doesn't have to mean anything, but I think the situation is right to move that trail stop and probably be a small loss / break even, or maybe it still turns around and makes that fall to the target. All right, looking at the 1-hour chart, what do we see? This particular candle high is not, it's been challenged, but really not broken, right? This is a dominant candle. I would say it's strong close. The last bearish candle with the strong bearish sentiment here. So we're kind of in the range already between these two levels at least. Let me change this candle, this trend line, sorry. All right, let's take this away. Good. Alrighty. So these two lines indicating the range that we're in at the moment. And we see some bullish candles, but still they're all within that bearish candle. So I wouldn't read too much into it. The 4-hour chart really doesn't have any dominant candle. The last, I would say, strong candle is still probably this orange line. This has some wick here. This is smaller candles. So on a 4-hour chart, I think that these resistance levels probably are still the most important ones. 106.80, 106.90. But in hourly, we can see that if it does break through this level, there could be a small retracement to the upside. That zone is very small and not worth trading to the upside, I think, because we're too much in a downtrend. All right, I think that's it from my side. I think that this trail stop loss makes sense. I think that the moment, maybe actually, if I think about it, the trail stop above this top could be better, slightly better maybe. If price does get here, it could be meriting, could warrant new shorts, but I would not take a pending order at those levels. Would keep an eye on price action. And a break of this bottom, what is it, 106? 106.30? I think is interesting if it breaks below this bottom. I think that I wouldn't jump here too. I wouldn't put a pending order, but definitely getting into a breakout kind of bearish territory. And I would be looking for something like this if price does something like this, for instance, and looking for smaller bear flag on a 5 or 50-minute chart, and then try to trade it either from the turning spot here or from the breakout to the downside. That's my plan for a breakout to the downside of the euro dollar. All right, so that was the review of the euro dollar. Vera, I'm not sure what you mean with the review of today's and yesterday's. You mean of the currencies we talked about yesterday? Well, the pound to trade was a loss for me. It reversed during the news event. That's always the risk of it. Sometimes it helps, sometimes it doesn't. So it depends if you decided to exit before the news event and you made a wise decision or you made a profitable decision. If you stuck to it like me, then that was a loss, at least if you used the same stop loss as me, because it did just barely break through. I just didn't have it wide enough, I guess. I had it above yesterday's or Monday's high, and it just wicked a few pips above it, and now it's again in a range. So definitely a ranging day yesterday on the pound USD, and it's a bit awkward price action. It's just messy. You can see all these candles kind of blue, red, blue, red, 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 blue. There's no impulse here. There's definitely a choppy zone. So not much to read in it besides that. I'm still looking for a bearish break, but now the bearish break would have to push through this 4-hour candle bottom. This 4-hour candle is pretty strong. Have to break that low at 150, 150. And upside, I'm not that interested, but if it breaks above 152.30, price could go up to 152.80, which could be again a resistance spot. So I think that these levels are good for shorts, and below here is good for short. I don't see any longs at the moment that are interesting. Now, all in all, this channel, basically we're in the middle of the channel. So if price does make a down move, the space seems to be a bit limited now. If it makes an upside, also the space seems limited, and we're soon hitting resistance at the top of this channel, which actually maybe the most interesting trade to the downside off of that top of the channel. This is already 7th day that hasn't broken this bottom. So if I do get a breakout trade on the 4-hour chart here, I probably would not be aiming for the target. Oh, yeah, I think that doesn't make sense. I think aiming for, let's see, first of all, maybe even this level, 151, doesn't give a lot of space. Would have to be on a smaller time frame. There's about 50 pips here, and then maybe another 50 here. So there's not a lot of space on the 4-hour chart. Now, after yesterday's bullish candle, you can see here this bullish candle. And you got bullish daily candles, and here a bit of indecision. So I actually, when looking at price action on the daily chart, it looks like a bullish break seems more likely at the moment. In any case, because of yesterday's doji, trading it here in between yesterday's high and low is not really interesting. And if it does break yesterday's low, there's a small space here, but probably only worth on a 5 or 50-minute chart. Yesterday's high bumps into these fibs already pretty soon. I'm not a big fan of this pound dollar at the moment. All right, dollar yen was looking for a 38.2 fib and didn't get it. Now hanging about, going sideways basically. Let's take a look at the 4-hour chart. Bearish candle, pretty dominant, pretty strong bearish candle. So I think still the 38.2 fib is a good level to think about for trade to the upside. 38 or 52 fib still remains the same. Same story here. Let's see if that retracement happens. Audio Z. All right, we're talking about this triangle, this resistance, the support. Yesterday's candle didn't do anything. Monday, Friday, nothing, just going sideways. Price action, we have kind of a mixture. We got a strong bearish candle. Actually, that candle's still pretty dominant. That high not broken. We got a bullish candle, that low not broken, so stuck in between these levels really. And I don't see any trade at this moment within these levels. Could zoom in maybe to an hourly chart, see how that looks like. Well, we are retracing this particular impulse to the upside, so this could be still maybe a bouncing spot, but considering resistance so nearby, I don't like that particular zone. It's too tight, I think. You know, discovering or finding supportive resistance at bouncing spots is one thing, but and the other thing is, you know, how much space, potential space is there. And there seems to be a lot of resistance here. It's very close to this resistance trend line. It could move up 20 pips and then head back lower. So no, still waiting for the break of those trend lines and those resistances and supports. All right, Kiwi made it to the resistance levels. Was talking about yesterday. Remember that saying that this is a consolidation zone, was the potential for a retracement because of this divergence on the 50-minute chart here. Retracement back to the long-term moving average, the purple. And that's what happened. It hit the purple, went up to this resistance zone that we were talking about, and turned around 64, 80-ish, right? What was it? No, sorry. Yeah, 80, 90. Went up actually even to, yeah, 90, 92 to be precise. Then went down, made a good fall, but not all too much. 30 pips, couldn't break this bottom. And that's sometimes some things that can happen. One way to know what is a good time not to expect a break is when price fails to break this bottom or this bottom within 5 to 6 candles. So now obviously, let's see, 1, 2, 3, 4, 5. The sixth candle was the retracement candle. So it was still a good short, but the likelihood of bottom breaks did decrease because of that, because 7, 8, 9, 10, 11th candle, yeah, that was one of the warning signals that it was too late. If we still wanted to see how this particular push would end up. We can wait for 5 candles not breaking this bottom. 1, 2, 3, 4, 5. That's here. So using that as a trail stop, it's still a small profit. Hope that makes sense. If not, let me know. In the meantime, this is a bullish candle, pretty strong bullish candle, engulfing the last 4-hour candles. The previous dominant candle has been broken to high. So I would say that from a price action point of view, the bulls are in control at the moment, despite the downtrend that is in play. It certainly is a downtrend. But from a price action point of view, I think we're seeing signals that the bulls are wrestling some control back. From a time factor point of view, this is 1, 2, 3, 4, 5, sixth candle. So this particular low has not been broken 6 candles in a row. The 6th candle is bullish, which is this one. So I think the environment is a bit different. The downtrend still remains intact, don't get me wrong, but it could be time for a bit of a reversal. So from that point of view, I think this is a long reversal potential trade. Stop loss below the candle low. And the target, probably a modest one at 65.08, the minus 61.8 target, which is really a small trade. Maybe too small, actually. Let's see. Could there be a bigger target in scope? Maybe yes. There is divergence on the 4-hour chart in the meantime. Why? Because price, you see the oscillator has turned. Price was not able to push through yesterday. 6 candles, 6 4-hour candles, 1 full day of trading. Not able to push through this low. So from that point of view, price could even retrace higher. The purple line is the official target with divergence. So that could be, let's see, around 65.75, I would say. It's a risky one. Reversals are always risky. Also, from this point of view, it's still at the top of a range. Right? Don't forget that. Like this triangle, it's relatively at the top of the triangle. So on a 50-minute chart, what do we got? Impulse, but still a resistance is present. So it's going to be interesting if it could push through this resistance, or if it's going to make one more retracement, maybe back to, for instance, 64.68 or 64.62, and then bounce back up probably again and use that as support. So do we get the break, or do we get a bigger pullback and then a bounce back up at support? But I definitely think that the downside is not looking as comfortable anymore at this point. It could continue the downtrend, don't get me wrong, after it retraces a bit, probably. And it might retrace. Interesting shorts could be from here, for instance. That's the zone probably that I would like to see price go to for thinking about shorts. All right. Dollar CAD, we talked about the reversal potential because of, well, basically quite a decent amount of confluence, I would say. We got potential head and shoulders. And price is right at the level of the left shoulder now. So this could be the right shoulder. It is making a rising wedge, or was making a rising wedge. It had probably divergence. I don't have the oscillator here. 1 second. Yep. You can see this is the highest peak. Price was lower and lower twice in a row. here, and here. And then I said, wait for a clear candle through this green line. Let me make it a bit different. This green, the dark green line. Wait for a clear candle through it with the majority of the candle below it. This was not it. This candle. This did not meet that requirement. Or 5 to 6 candles, right? Not breaking the high. 1, 2, 3, 4, 5, 6. That's this candle. So here already we can already estimate that this impulse to the upside is over. Once that happens, there are a number of ways to look at it. You could, for instance, take the trade right then, right there, or wait for a bit of retracement to the 50 fib and miss the 50 fib. Another way could have been this first bearish candle, for instance. You can see when looking at this price action, dominant bearish candle, that is true. Yet this bullish candle is also still alive, right? So those are the things to look at. Those levels. And price going basically sideways. It did push a bit through here, so maybe for first signal already. So it's still quite rangy, in fact. Although the trend line did break. From a time factor point of view, this is looking bearish. But it could be maybe better to wait for. I mean, if you look at it from a certain point of view, from the trend line point of view, this could have been a short. If you're not in the short, then it could be better. Or if you didn't take the short based on time factor, like I said, like I was talking about yesterday, then it could be better just to wait for this bottom to break. But it is a reversal trade, and those are this dollar CAD is not an easy currency, I think, at the moment. But yeah, there could be some space to fall back to the bigger support level, right? Let's see if there's something better. All right. Yen talked about the potential for upside at 88 or 78.6 fib, or even the 61.8. Now, price didn't get that deep. Surprisingly, I thought it would. It didn't. And price more or less respecting, I guess, the 61.8. A lot of wicks here, so it's showing some struggle of the downside, certainly. Big wick here too. So we might get that correction that I was already thinking about yesterday, like this. One thing could be good is this strong 4-hour candle here. Could be a first signal of a potential continuation to the upside. Could be breaking roughly a trend line like this. If you connect those highs, you can see a trend line like that, right? When you connect those candle highs. And connecting these bottoms, you can see that maybe there was a slight falling wedge here. Anyhow, price definitely breaking out of that, but it depends how this 4-hour candle closes. If it closes pretty strongly, I think could be a signal that we might get the zigzag continuation up to 132.60. In that case, could be a good idea to put a fib on this 4-hour candle or on this 15-minute up impulse. Wait for a hook back before a bounce up again. And it could be something like maybe even an inverse head and shoulders from here. 130, 125. All right, pound yen. So we got the break, 2 candles that broke above this trend line, a doji, a bearish candle, and then again a bearish candle. Anyone who's in a breakout to the upside, by any chance, it's really not, I don't think that there's any reason to stay in that trade. Better, I think, to take a small loss here, or maybe you manage to take break even. Because with these bearish candles, we don't know how far these bearish candles can go. They can keep pushing. That's the thing with with any market, but definitely Forex. The momentum is very important. And here the momentum was up. You can see we had bullish candle, small with these bullish candles with good closes near the high. Then we had small candles. And then we had, again, a push up. And yeah, I think that this moment with these bearish candles in play, well, this is still a significant wick, so maybe the most important candle is still this one. And that low has not been broken, but I think at max the stop loss should not be further than this low. So price is right there right now. Of course, you can always use fractals. There's nothing wrong with fractals, but in general, but in this case, I'm not sure if it's worth it. Two bullish candles, so from that point of view, it might be worth it because of the daily low. And looking at the daily candle, this could only be a retracement for more upside. But looking at the momentum on the hourly chart, it wouldn't be surprised to see, I mean, looking at this momentum at least, at the moment you can see there could be reason for continuation. This was a bullish candle poking out here all of a sudden, but that seems to be challenging right now, in fact. So a bit of a mixture when looking at all these time frames. I don't know. Let's see. I think that Euro-yen looks a bit more interesting because of the reversal potential here. Pound yen, I don't think. Maybe if it gets lower for a bounce trade, for instance, to the upside. Does anyone hear me at the moment? It says audio connection lost, but maybe you still hear me. Hello, testing 1, 2, 3. Hi there, everyone. I think I was the audio connection was lost there, so hopefully you hear me again. The euro dollar is pushing up and breaking that through that level we were talking about, that making that breakout above that level, but I still expect this to be a reasonable resistance level. Let's see if it can turn or not, or if it does turn or not. Pound USD still going sideways, in fact. And yeah, I was talking about the pound yen. So from that point of view, maybe if it moves a bit lower, a bouncing trade off of this bottom, for instance, could still be interesting. But I think euro yen seems to be a bit better because of the impulse to the upside. All right, let's take a look at euro AUD. It was one of the biggest movers, in fact, yesterday. And let's take a look. So yesterday, let's see, price action was around here and did break to the downside. It was the 16th candle that broke this fractal, and the 18th candle that broke this bottom. That's good, right? That's why this break was not that likely, because it was between 6 and 13. Let me show you. This was candle 7, 8, 9, and we got a bit of a bounce here indeed before moving down. Anyhow, so now we reached the minus 61.8 target of this fib, the 38.2 fib, and that could be a bigger bouncing spot. We already have a series of 4-hour bullish candles. This is candle number 4. This is breaking this high, it's challenging this high, so it looks like that we might get a bigger correction, I would say. I think that this could happen. So I'll be looking for 1 or 2 more candles that don't break this bottom, and I think we can get maybe a bigger ABC zigzag corrective rally to the upside on the euro odd when looking at this 4-hour chart. Now, I do not want to underestimate the trend either. This is, this could be just a correction as well. This is only the 4th candle within this downtrend. But the minus 61.8 target is something I don't like. So I think what I would do is just wait for a reversal trade. I will not touch it at least until we get 5 to 6 candles, not breaking this bottom. With a downside trade, the downside trade could make sense either if we get back to bigger resistance, but that might not happen today, or if, let's see, would have to break really this bottom. This trend channel break is not enough for me. It would have to be the same as the euro dollar. It would have to break this bottom, make a small flag or correction like this, 3-wave correction like this on a 5 or 50-minute chart, and then look for shorts as a continuation. Okay, let's see. Any other currency pairs? Well, pound Swiss just showing a lot of bullish candles. We talked about the impulse, right? Well, that's definitely here. We've got a series of bullish candles. The bullish candles are the strongest. They're the majority. The bearish candles are just a few, typically stay within the previous day. The closes are near the high on the bullish candles. So this is a good daily impulse to the upside on the pound Swissy. It's trying to break through this resistance. It is at still a very major resistance level. So that's something to be careful of. All right, so this daily candle is still okay. So I think that any retracement like this of a daily candle could just be a pullback for more upside. So from that point of view, if we look at the hourly candle, it's probably making kind of a 3-wave correction here. So we can put a fib from here to here, for instance, right? And I think any of these fibs, this 153.88, could be a bouncing spot. Well, it shouldn't break this this target and this bottom. So anywhere in here really could be a good turning spot for the pound Swissy for a continuation of that daily breakout. pound New Zealand. Let's take a look at that. It was a big mover, big volatile. Therefore, it's a bit difficult, too volatile perhaps, but weekly chart definitely showing impulse to the upside. Right, some bullish candles here. Making a bit of a channel to the upside. And there could be a bit of divergence between these tops. It's not confirmed as yet, but it is lingering. Looking at the 4-hour world, I see quite some choppy candles here. Don't really like this particular structure here at the moment. So no, I don't really see something interesting. Maybe Euro New Zealand. Well, this looks like a chart pattern. Obviously, it's quite a long one. This is a 4-hour chart, so this has lasted for a while. So let's see, day number 19, the break of this flag should be a good breakout trade to the downside. Break of this candle low at 163. That could be good. So that's the Euro New Zealand. All right, let me see. I think we looked at pound CAD already, but nothing really that's something interesting that strikes me here at the moment. Let's see if do you have any suggestions? I mean, I think we looked at many of the currency pairs already. Maybe we could take a look at something else. Let's see. DAX really going sideways. Oil hanging around that 40, 50 level. Gold another bearish day yesterday. And yesterday's low was equal to the big low here. Big impulse. Look at this. Typical, very strong price action. Candles, bearish. Strong closes, strong candles. Majority of the candles are bearish. Small bullish candles, definitely impulse, but now it's at support. So all right, nothing new, I think, from a stock point of view, just a small day, bit of a wick, hanging in the middle of support and resistance, and hanging in the middle of nowhere. Well, not nowhere, but definitely a zone where it's could go either way. So, any questions on maybe impulse and price action from how you can read it? So once again, key things to look at is majority of the candles, the close of the candle, the size of the candle, how do the opposite candles look like? And then key thing in impulse is, which is the last dominant candle really? And then looking at that higher low, and that candle higher low, the dominant candle higher low really, in a way, the one that has it's a kind of a mixture of things of size and close near the higher low. That one then is important for stop losses and for potential end of that impulse, in fact, right? So that's it basically. So any questions on that by any chance? Do you have any questions you want to ask, or any currency pair you still want to take a look at again? Here you can see an example, by the way, of up impulse, right? What is the dominant candle? Was this one still right here? And that got broken with this candle. Bearish candle, strong bearish candle. And that's a candle really with the red arrow there that you really don't see anywhere in this upside. Then you see small candles going sideways that stay within that bearish candle. And we have 5 to 6 candles not breaking this top. Well, those are very strong signals that impulse to the upside here, where I have the green circles, or I make the blue circles here, right? Blue-green circles, is over. So, and 4, 5. So here, roughly here, well, let me say exactly then, this candle, that became very likely that impulse is over. So we indeed see a continuation to the downside, but ultimately, the bearish candles are there, but they don't gain a lot of size. I mean, they're not really very big compared to the upside that we had here, where I have the green circle. You have some, obviously the bearish candles are a bit bigger than the bullish ones, but they're not all too strong. So then, slowly but surely, we see a different pattern occur, right? Which is then, if this happens, like doom, doom, like this, starts to be a bit more choppy, then we can see that it's a chart pattern, and that's, of course, the bull flag, which is a bullish signal eventually when it breaks, especially because prior to that was momentum. So that's how you can then interpret that particular price action. And it price stopped at the 38.2 fib and then bounced. Then we got indeed bullish candles here and here. And now we're seeing candles sideways, going sideways. So there's indecision at the moment. But the recent candle actually was bearish. So from that point of view, a bigger retracement is possible. Yeah, the pound USD is just really in a bit of a mess here. Just making some ups and downs here. I think that this could be a very choppy London Open. Considering it's halfway, I wouldn't be surprised if it does this, and then does this, and then does that, and maybe just stays again. Eventually could break, but I think if it does break, it will be later today. That would be my bet. So I'm going to be very careful with the pound today. Maybe we can, this price action. Let me get rid of everything here. If you look at these impulses, you can clearly see. Let's take a look at here, for instance. You can see, that a lot of these these impulses match the description that I was talking about, right? And here you can see the end of that upside. Here you can see the end of this correction when looking at time factor, but also price action candlesticks. Here you can see dominant upside, and here you can see the end of that. And actually the bears taking control with dominant candles. Here you can see the end of that. This is going sideways, so that means indecision, and the bears regain control. Here there's a long period of indecision, with this candle still being the main factor, but eventually price actually breaking through that finally. Here you can see, for instance, when it turned here. So here we had a new upside environment, correction, and continuation. And this was the last bullish candle. So when it broke that low with this candle, the upside was definitely in trouble. And that was probably, if you're looking for a trade to the downside because of higher time frames or reversals, then you can see that would be the moment to do so. And the best exit probably would have been 1, 2, 3, 4, somewhere in here, or maybe even this candle, right? Because the most dominant candle was either here, that one. One second, let me get rid of these others. Or this one. In any case, this candle broke both of them. So that was the fourth candle, and this was the sixth. So it's about the same level anyhow. So that at that moment, this bearish impulse was definitely a high chance of being over. And indeed, we got one more push up. Ultimately, it still stayed in a correction though. And then we get closer to, no, not yet actually. Well, yeah, I think you get the point. So I'll do a recap, and I guess we can call it a webinar. If you still have questions, just let me know. Tomorrow we have, or tonight actually, then it has multiple time frames. The stochastic system is going to take a look at how to use stochastic indicators in multiple time frame analysis. And tomorrow we're going to take a look at Monday and Friday trading with the volatilities a bit on the lower side. All right, from a recap point of view, this is retracing strongly, so I think this is going to end up a break even or a small loss, probably the $0 short. Regarding new trades, I'd still keep an eye on downside trades if it turns somewhere in here. Right, I still think that could be a good retracement or reversal back down, but I would like to see some confirmation on, for instance, the 1 hour chart. A break of this level could also be interesting for bearish environment pound. Really not interested in this that much. If it does break this bottom, yes, that could be a breakout, but 50 pips limit space, then another 50 upside, small space, but then bumping into resistance at these fibs. Dollar yen looking for a bounce at these fibs for upside continuation up to 124.50. Odd USD keeping an eye on these two trend lines for break to up or downside. Kiwi, probably I would expect, considering the evidence at the moment, a breakout reversal trade either from here right now or after one more push down and then a bounce. I would not consider shorts unless it breaks this bottom. Dollar CAD looks like it's in a reversal environment at the moment. Could be some small falls, docked back to support, but support is pretty close by. Euro yen looks like it's going to make a zigzag. That could be interesting. Pound yen could bounce from here. This support at 186.80, 187. pound odd is, well, still stuck between all these trend lines, support and resistance. So no, not that interesting. Still the same kind of situation as yesterday. Euro odd looking for the break of this bottom or a bigger zigzag as well. Euro New Zealand bear flag looking for a break of the 163. Pound New Zealand didn't like it too much, was careful. Pound Swissy bounce somewhere in here could be a good continuation of the daily impulse that we had to the upside. So those are my 2 cents, at least on all these pairs. And well, hopefully those 2 cents will prove to be somewhat valuable. And I'm looking forward to see you in the webinars today with Nanette, tomorrow with us. We've got the same schedule next week as well, by the way. So those are options as well. And well, wish you a good day and talk to you soon. Cheers.